Today we have trading ideas on this implied volatility rank. I will explain you what is the IVR and how to apply it in selling options premiums. Have fun! So this IVR is probably a feature which you can find in the Tastytrade account. Frankly speaking, I don't know if the other brokers are running this IVR as well. I just refer to the Tastytrade account because I think the IVR is a very interesting, I said, additional information to the implied volatility percentile. And the definition here you can see of the IVR is nothing else that you compare actually this formula with current IV, which is let's say can be any amount, but then you take the 52 weeks low of the 52 weeks high of this so-called IVR. And what's so great in Tastytrade is actually you can check this IVR of each stock in just entering the ticker plus the .AVR. So you can get a chart. Here I have one about Amazon. So actually this IVR indicates you a little bit what's the implied or what's the volatility actually is doing, and it gives you a good information in trading ideas like we will see now. So really check it out. Whenever you have a stock or an indices you like to buy, just check out with .IVR how the rank is currently doing. Is to how to obtain this kind of IVR, which actually is in any watch list. So you just go here where you can see the you click here on watch list, and then you can select any one. If it's now Tom's watch list or the S&P 100 index, you can find a lot. And once you got the stocks, you can see the prices, and here, very important, you have the IVR. And then you just click here to select the highest IVR on the top, because obviously you are interesting more or less that you want to have a trading idea with the highest possible IVR. Nowadays it's a bit difficult to find really a good one, because obviously you could say, hey, I have a Microsoft here at 50 IVR, which is great, but these IVRs mostly are now high because of the forthcoming earnings. You remember now in July, always by the end, last week of July, you're going to have the earnings of Microsoft, Google, and so on. I have checked it a little bit, and most of them, they have this earnings. So you have two possibilities. You wait till these earnings are gone, or you make a transaction of a trading idea upfront the earnings. Let's say we will do that now, or I have found an example for it. So again, choose your stock always in checking this IVR. If the IVR is too low, let's say below 20, I would not enter it for the moment in doing a trading idea. I would just wait a little bit till maybe it goes to 20 to 30, and whatever higher is better. So finally, I have found an IVR on Disney. Disney brings the earnings around 18 of August, and I have here done, or I will do a kind of strategy which is only till the 4th of August. So once you got now this IVR, which here I have again this statistic, so the IVR here of Disney is 30, which is nice. Then actually you just go into trade, and you choose a strategy just to get a bit knowing the range. Maybe just to say, now when you enter again the trade, you have to enter Disney DIS and not anymore DIS.IVR, because if there's no trading, let's say on an IVR, you just take this as an information here, but then you have to enter just Disney again, the ticker. You go under trade, and you can even select here the short Strangle, because what's important here now that you can see the range, which is here in the kind of orange, the range of Disney of the price expectation of the implied in volatility. You see here the price expectation is among 92 to 84. It's just because I take the quote at the moment plus minus here 3.95, or let's say $4. So in other words, I will now look for an Iron Condor or a Strangle just at or outside this range, because this is what I think now in the next 2 or 3 weeks it will be fine to trade options on that side and that side just outside the range. Here now I have selected some ideas, strategies. We're talking about Disney, so I use an Iron Condor, as you can see here. You see it's an 94.92 to 84.82 with a pop, which you can see here, of 57, which is more or less okay for the range of an Iron Condor. Okay, I get just 0.65, but just to show you, it's a kind of expiration of the 4th of August. Always I would like to have a bit a longer expiration, not just this 2 or 3 weeks. I would just like to have maybe 1 month or 1.5 months, but I just want to show you how you'd proceed with this. So if you want to be a bit more aggressive, that you want a bit more premium, well, you would just narrow a bit the strikes of the call and the put, as I show here, but you see the pop is going down to 48. I see, or I say always, the pop should be around 50 when we are talking about an Iron Condor. Down here you see as an undefined risk the short Strangle, the same expiration. So I do an 84.92 with a pop of 65, which you can see here, and I would get 161. So 65 is a nice pop, let's say, but if I want more credit, okay, I would go and narrow the spreads again to 85.91, so I would have a pop of 61. So you see overall very interesting strategies just based on the IVR of Disney. Summary, the definition of implied volatility ranking, as again, it's a very nice information. I really trade now by that. I wait a little bit. If the stock gets about this 20 range, then I would look or choose for a strategy. So you choose the stock index with a high IVR through the watch list. As I said, high IVR, let's say 20 plus, 20 and higher. Then you choose a call and put strike outside the expected range, as we've seen, that you have this information of the implied volatility. You choose an expiration of the two options between 14 and, as I said, 45 days. This is probably much better because you would get a higher premium. And then you actually define yourself the defined risk or undefined. In a defined risk, it's the Iron Condor because you know what you're gonna, what is your maximum loss. But you should always try that you get a pop of around 50%. If always it's an undefined risk, because you can extend a bit your strikes on a short strangle, the pop is just 65%, or it's actually better 65%, so it makes more sense in doing a short strangle. Overall, we can say that this IVR is a kind of essential as a basic to go into any strategy idea. And I think I really would recommend you that you check upfront always this IVR of a specific stock or indice when you begin to trade. Well, that's all for today. So I hope you have enjoyed and see you next time. Bye bye.